So today on the Tech Guys Who Invest, we are so excited to have Vinney Smiles Chopra on the show. Vinney, welcome to the Tech Guys Who Invest.
Oh, thank you. Thank you, Adam. Thank you, Kevin. It's such a pleasure to be with you guys. Really.
We're super excited to have you on. We can't wait to dive in. So, Vinney, we know you are really an expert in multifamily investing. So I think we'll start there and ask you how you got started in multifamily investing.
Oh, totally. If I may kind of cut short a lot of years, I came from India with $7 in my pocket. Some of the people might know me there, and sold Bible books and encyclopedias and all, cut my teeth in sales. I'm a mechanical engineer, but I cut my, teeth in sales. I said, I like it. I like relationship building and things like that. So I became a promotional consultant, actually, raising I would say thousands of dollars, not millions. I raise million now,
Excellent.
But we were buying, single family homes all over USA. And anything we could save money, we'll just buy a single family home. Because that's what was going on for 35 years,
Okay.
We've been married 39 years. We've been living nearby San Francisco, but we bought in Phoenix, in Georgia, in Texas, Washington, D.C., Maryland, all that place, right? But as you know, the single family homes, they're okay for small cash flow, but not too big cash flow at all. And if something happens, a snafu, I call it, little stove goes out or a boiler goes out or something happens, or the tenant leaves. Oh my gosh, you got 100% vacancy.
Right. Yeah, that's right.
So those things, when I became a broker, I'm a broker, by the way, California broker in real estate. So about 2004 or so, I passed the test and everything. I said, Vinney, what do you want to do with your life? Do you want to just sell homes and all that? My wife has also sold single family homes before. So we formed a company. We bought a business license. Everything was done, the cards and everything. We were ready to sign a lease for an office. Oh my gosh. We just, went into, do we really want to do it? You have to take your, chips. You have to kind of, say, if we get into it, we're going to be busy all evenings, all weekends and everything, right?
Right.
And that's when I tried to go into commercial. I told my wife, we're going to go commercial. I don't know where, but I checked out the office space, leasing office space was one option. Then, of course, I looked at industrial, looked at hospitality, but multifamily just caught my attention because of engineer, my logical mind. It just says, oh my gosh, if we have 20 units and only one goes, vacant, we still have 19. Yeah, so 95% occupancy or something like that. That's what really made sense to me. And I started digging into, my philosophy is, whatever you want to do something in life, you just go for it, So you make a decision. And that's when I said, who is number one in America who can teach me, about multifamily? So I did Google and all that. I found out there were two books, and they're still very good books, by the way. Yeah, by David Lindahl, right there from Boston. And I read one book, I just yellowed it, literally. So many times I said, man, he makes sense, I still remember that. Yeah. So that's when it changed my life, kind of going into multifamily,
Yeah, that's awesome.
So with multifamily, there you said a lot, and thank you for sharing. I wanted to unpack a couple of the things that you mentioned. You talked about how the single family homes, if something goes wrong, you are kind of you're in a sinking ship at that point because that tenant is the only person in that house. So sorry, go ahead.
No, so true. You're so right. And the thing is that you have to then get yourself advertising and all that. There is cost involved. Or if you have a property management company, then they will charge you lease amount, right? Yeah.
Yeah. And it sounds like you're covering your risk by investing in real estate. That's the engineering mind that I see.
Totally.
Is that right?
Totally. So true. I mean, if the mortgage is always due, right? So if we have like 2 residents live, we never say tenants in our circle. We say residents because they're living in Monil communities. That's the companies we own. One acquisition, one management company. Monil is my kids' name, Monica and Neil. We put it together. So that's our name brand.
That's awesome. Yeah.
And we changed the communities we have bought quite a lot, by the way. We have bought 27 communities. I bought actually 12 in just 2 years. Just 2 years, time, every 2 months I was syndicating and getting money from my very established investors. They're very rich people. And I just started with one, of course, back in 2007 or 8, something like that. But it's just mushroomed from there to like 6 and 8 and 12 and 18, then 36, then 54, then 86. Now we have 139, maybe 148, I think I heard last count.
Man, there's so many questions I want to ask you right now.
I'm all yours.
Oh man. All right. I want to start with, this is a question that I'm asking selfishly because I am 20 years ago or whatever it was. Like I'm just getting started, just landed my first one, already looking for my next one.
I love it.
And I'm thinking, man, that's amazing what you did. And how did you get, that's a lot of work, to get those back to back to back. What do you kind of attribute some of that success to and how you're able to do that to?
Surely. I would say that commercial real estate, especially when you're buying apartment units and all, you need some sponsor. You need somebody. If we don't have money, I didn't have any money, so my partner and I, it's good to have one partner, by the way, too. A good, trustworthy partner, because it's a, team sport. Because you may be down, the other partner may be up, and you're building each other. And, one can do certain, the analysis and underwriting and all, which is a huge part, by the way. The other one is to raise money, because we have to be developing relationships with the investors and keeping the investors in the forefront. As investors are gold, I say, and residents are gold. Those are the 2 main gold people, because they are the one, if we can really project that, and we are not selling them anything. See, that's the thing. The trouble is when we go out and we say, would you invest with me? You want to educate the investors and just let them know why multifamily, why this is, USA is becoming renters nation, with millennials and Generation Y and baby boomers, going like downsizing, we call it, right?
Yep.
And the millennials liking more portability, things like that. So you're right. Yeah.
That's excellent.
Those are all good points. So Vinney, when you talk about trying to find a partner, somebody that can complement your skill set, what advice would you have to newer investors or even experienced investors on how to find a partner?
Very good point. I would say that definitely go to multifamily meetup groups, because that's where like-minded people are meeting. And I also say RIA groups are amazing, of course, within your town and also a little bit bigger town. If you are living, a little bit far away, then you want to try to go to some of the boot camps also. I used to go, not anymore, but that way. And also, please, on the social media, I know Bigger Pockets is amazing. There are lots of other, social platforms where really groups are there, right? Like I have about 1,000 groups, I think, in my, circle of my academy, and lots of students interact with each other. And in my coaching also, I try to put people together, because, if they have a similar mindset, that's the key, right? People can get together. The biggest thing is to be having trustworthiness, integrity, and then also if they are working in a similar situation like you are. If you are working part-time, they're working part-time too, So that way you can really put it And I always say that don't really form a company. I did a mistake because I had another partner with me, and we kind of made a company, which is Ideal Investment Group, Management Group, which we have to then carry along all the syndications. But I teach now to really make your own company. Your partner makes their own company, Wyoming LLCs or whatever, and then you join together to go into the acquisition.
Okay. Yeah, that's really some good advice.
Mm.
So occasionally I'll run into people who are just getting started in investing, and they may have some rental houses, and they'll talk to me about commercial investing, and I'll explain some of the advantages like you did. And they almost seem like they're not quite sure if it's as good as it really sounds, because it's
my gosh, wow.
And I think people like you are proof that it really is. I mean, when you made the decision to go multifamily years ago, has it been what you imagined? Has it been that good?
Oh my gosh, it's been wonderful. I mean, if I may say, not to brag about me, but the cash flow is amazing. I mean, it's the magic of thinking big, right? We have that short, and of course, Napoleon Hill's, Think and Grow Rich.
Oh yeah.
That's the two books I would like everybody who's doing single family to read those.
Okay.
That will really set your mind up. It's all in the mindset. And the good part is, let me just kind of say that if they are into the single family wholesale or flipping or things like that, it's a job. It's a job, because after one flip, after a month and a half or two, you have to look for another place, right? Another single family, another value add, we call it. Right. The same thing is true for wholesaling. You make 5,000, 10,000, but then you could look for one more. I did really good podcast actually with TJ Hines. And like I was mentioning, but the key thing is, it's one transaction, only one transaction. And you will get 20-unit apartment building, one loan, not 20 loans. If you're doing single family, it's 20 different transactions, 20 different qualifications of the homes. And with the apartments, it's much easier to get the loan. Oh my gosh. It's much easier because the value of the apartment community is based on the NOI. That's the net operating income. And that's the key factor. When the bank is looking at giving you 70% of the loan or 80% of the loan, they believe in that product. They believe in that community, So those are few. And then, of course, the depreciation effect is humongous, especially with Trump now doing this special, bonus depreciations on the first year and the 5 and 10 with cost segregation. The bill back system is amazing in the multifamily, which we cannot really do that much in a single family,
Sure.
So that is a tremendous avenue too. Yeah.
Okay. So, Vinney, you said Think and Grow Rich was one of the books, and I'm not sure if I caught the other one.
Oh, the other one is The Magic of Thinking Big.
Oh, okay.
Magic of Thinking Big is an amazing book. It transformed my life. Many, many years back, I read it. Of course, then Jim Rohn and Zig Ziglar and Tom Hopkins and all the great mentors,
Yeah, they're great.
I love it. I mean, that's what we believe, Adam and I. You have to have the right mindset in order to be successful as an investor.
Totally. It's so true. And once you will taste it, I can promise everybody listening to me in your broadcast, if you taste that, get that 4-plex and the 6-plex and 8-plex, you will never go back to single family. I promise you.
I love it.
That's awesome. So, Vinney, we're kind of touching on mindset a little bit here, and I know you started with almost nothing and are extremely successful by anyone's standards now. To what do you attribute your success?
I would say just going for it. I think the passion about whatever we do in life, it could be investing in multifamily or investing in hotels or investing in mobile home parks. I always learned something in my sales career, sell in bunches, like the monkey eats bananas in bunches. I always have that analogy in my mind. I always look at a prospect. Whenever I was also motivational speaker, I never looked at the prospect as one person. I always looked at that. He's got 10 more people he's going to tell about my services. And that's the name of the game. Same thing is true with our investors. Once we do good for them and give them the preferred returns of like 9%, 8%, plus the equity gains. So I always tell my students and everybody I teach is that please say we are always looking for investor partners, equity investors, not debt. So we are looking for equity investor partners to use those three words together that brings the other person closer to you, because they would like to invest. And the other thing is they would like to partner with you. And then the third thing is they're equity investor, not debt investor.
Excellent.
Wow.
Advice.
Yeah. That's
Excellent.
a lot. That's a lot of good advice. I wanted to ask if you could further clarify the difference between that debt investor versus an equity partner investor. I'm sorry if I'm butchering that.
Yeah. No, equity partner investor. I'm so glad you're saying that, Kevin. What that means is that debt investors just give you the money and you give them 10%, like say per year return, right? And that's all. It's a debt. So you give the balloon payment after 3 years, 4 years, 5 years, but they do not really partake in the upside of the investment that you are doing. You just got a debt from them and you just keep on paying their payments and then balloon payment, right? Sure. Equity investor is where they are actually partners with you. When we raised like 10 million, like the one we just bought, $52 million deal in Orlando, in June, end of June, we bought it, Bentley at Maitland. And we are doing one tomorrow, by the way, $55 million deal. LOI is going out tomorrow.
Nice.
Wow.
Near Orlando also. Yeah, I know.
So exciting.
Thank you. But the key thing is, see, the equity investors is amazing because they are then becoming a partner with you in buying the apartment complex, right? So they will also not only get the cash returns from the operation of the property, but they will also get the upside when we sell the property, the apartment complex community, in 5 years. So they will not only make the 9% per year, but they will get 50% lump sum in about 5 years, because we find we can increase that value of the asset by increasing the rent, decreasing the expenses and everything.
Yeah, love it.
That's really awesome.
Yeah.
Vinney, have you always had this positive mindset, this high energy, and has that always been you?
It's kind of interesting. I'm writing a book. I wrote one. I'm writing another book on positivity brings profitability.
Oh, nice.
I like that name.
I was just going to put a little plug. I don't know if you
please.
Book yet. My apartment syndication made easy, which
it is on my list. I cannot wait to get
Amazon. In just a month and a half, my wife said, "You know what? This is great book. I knew it's going to be a good one, but it's got limited, appeal." Just saying, I've married to you for 39 years. You've been the most positive guy I ever known. So why don't you write a book on positivity?
I love it.
Vinney was ready next morning. He said, "Okay, great."
That is excellent.
Now we have to ask, how did you get the nickname Smile? I mean, it seems pretty obvious, but I want to know the full story.
If you're watching
I'm living up to that. What happens is when I came from India about 40 some years back, I was selling books, right? The books, encyclopedias, and also, what's the other one? Oh, the Bibles and Nave's Tropical Bible and the cookbooks. I would get like a trophy. They would give you a trophy every 2 weeks or so. And they thought that Vinney was smiling too much, They took my middle name out of there, Kumar, and in parentheses, they put Smile. They said Vinney Smile Chopra. this started about 42 years back, 42 years back, you know, and I said, man, everybody said, Vinney, you smile a lot, you know, and then I just have had on my electronic signature, my cards, everywhere, it's Vinney Smile Chopra.
That's excellent.
I love it.
So, Vinney, I don't think we've touched on this yet. We've sort of talked around it, but syndications. I want to ask you a little bit about syndications. I know you're an expert at that. We've known some people who've even done some pretty big deals, not as big as the ones you're talking about, but you know, let's say somebody thinks I'd like to do more of a 10 unit, not a big deal, but and they're thinking, well, I'd like to do a 10 unit, maybe try to do that by myself or have one other investor. And what would you tell them the advantage of considering a syndication is, and how would you kind of explain a syndication to somebody like that?
I would love to. Yeah, you know, Adam, what it is that syndication, as the word says, it's pooling of money together from the like-minded people, where you become like a manager, right? And then you are the general partner or sponsor, and the other friends who are actually trying to also invest with you, they become limited partners. So LP and GP, general partner is the one who signs on the loan and everything and guarantees, you know, but a lot of non-guarantee loans are available. We call them,
non-recourse.
Non-recourse, exactly. And then the limited partners are the ones you meet them every quarter, make sure the returns are given every quarter or every even month. You know, we are doing in monthly too. So it's a combination of both, having a good deal because the general partner brings the deal. We build relationship with the brokers and try to get pocket listings. We underwrite, we do all the research, we do all the due diligence. So there is $29 trillion of money with a T, $29 trillion in retirement funds in USA alone, but only 3%, 2 to 3% is invested in real estate. It's amazing. Wow. It's mostly in the Wall Street. That's right. You know, so my passion right now is to, as the baby boomers are retiring and the millennials are liking more portability, the apartments are going to be here for eternity. I mean, even though we build more apartments, you know, again, there'll be more demand for it, you know?
Right.
Yeah. So that's a huge thing. So syndication is a world where you could buy larger and more of the communities. See, if we have enough money, we could buy 8plex, 12plex. But if we can get more money from our friends and family and all that, then we could buy 80 units or 120 units. And they are much easier to manage, by the way, as compared to 8 units or 10 units.
Yeah. Now that's really a cool point. Most people don't know that. And I didn't really believe it. It's funny. There are a lot of these things that I was hearing when I was first looking into it.
Yeah.
It's like, that can't be right. I'm not sure I believe that. But now that I'm into it and I've seen for myself, it's amazing, but true. It's just because of the systems that you can execute with larger scale.
Totally.
Economies
of scale, having a full-time manager, you know, the community manager, having a full-time lead maintenance who is HVAC certified, you know, heating and ventilating, and then having even like a leasing agent. I see about 70 units. If somebody can get to 70 units, you can have one of each, you know. And of course, 120, it's even much better. 200 is better. But, you know, it's just that anybody who will try this out, I know they will never go back, because investors love you then, and you try to taste it. You say, oh my gosh, first one is the hardest one, really.
Yeah,
you know?
agree.
Yeah.
Totally agree.
Hardest.
Now, speaking of the power of apartments, you mentioned a lot how generation ago, people, older generations, the baby boomers, if you will, when they were having kids, they wanted single family homes. But now as a millennial, you're seeing that more and more millennials, or fewer millennials, are purchasing homes and they're staying and renting places. What
Yes.
do you look for in certain markets that say, you know what, this is going to be a good place to invest?
Excellent, excellent. My mantra has been, Kevin, always jobs, jobs, and jobs. I was like in Texas for almost 10, 12 years. Then I went to Atlanta, Georgia, make hay over there. I mean, my properties are doing very well. I'm selling one and keeping one there. And in 10, how many I bought? 24. I think I bought in Texas alone, by the way.
Wow.
And we have closed the cycle, meaning like giving returns back to the investors of 18%, 22% per year, 39% per year, 43.3% per year.
Wow.
So happy, so happy. But the
Yeah,
millennials, I know, they tell more people and they tell more people, right?
of course, yeah.
Always.
But millennials, by the way, they have seen some of their parents lose their homes. That has been in their mind 10, 12 years back, 2007 and
Sure.
8. The other thing is they love portability. They like to live in like C plus, B plus communities that have got good gyms, good swing pool, Olympic size.
Right.
They have dog parks and, they have nice hammocks and nice, tennis courts there and, all those nice things. So that's what is really becoming. I just had this one too, by the way, because we already closed it, right? That's the Bentley, which looks like a resort, by the way.
That
We
is
bought
nice
it
looking.
over
Yeah.
there near Orlando,
That's-
52 million. And actually, if you would not believe, we really struck gold there. Our appraisal came high than what we thought it will. The second thing is they already renovated a lot of units. It's 324 units, but
Wow.
296 is already renovated, but the rents have not been increased yet.
Man.
Oh, that
Interesting.
is the best time to get when they have done the heavy lifting and then you come there and you increase the rents, right?
Wow. So this is a good time to talk about how do you find deals?
Exactly what I was thinking as well.
That's so right, Adam and Kevin. I would say, again, it all comes down to relationships, right? Because these deals are coming, the big ones, small ones too, by the way, they are coming through the brokers because I really believe every broker within Tampa or Orlando or Jacksonville, they have their own trees of relationship. I call it trees and branches and leads. So a lot of people will approach those brokers to ask them opinion of value, we call it, right? Broker's opinion of value. How much can I sell this for? And then they will get another broker to come and another one to come. So the best thing is to get the address as soon as the first one calls you or they talk to so-and-so. That's what I did it in Texas, by the way. And we are trying to do it now in Orlando also and Jacksonville so that, we closed on something. And if the seller can take our offer, we could give them really good offer. Then they don't have to go into the best and final. And I call it dog and pony show, right?
Right.
Yeah. So brokers are a big thing. I would say, Kevin and, Adam, the other thing is we are working on this very big startup, by the way. I might like to, you're the first one I'm talking about too.
Yes, you heard it first here.
That's awesome. And what it is that I would love for your, audience to understand, we are finding that multifamily sales, even all commercial, is a big boys network, we call it. It's antiquated. It's kind of old. And the seller has to go to the broker. Then the broker has the upper arm to give it to the people that he likes or she likes. There's not too many ladies there at all, by the way. It's
Right.
all men, right? The other part is they give it to the very first. They want to sell and make double the commission. I can understand that.
Sure.
But then we are trying to put together technology and capital market and the syndication to target through algorithms, by the way, to find these sellers who we can approach before they even ask the broker to sell it. Oh my gosh. So this is a new concept we are developing in Silicon Valley right here.
Of course.
Area.
That's funny. I know a pretty awesome software developer in Tampa who would like to talk to you. Give my company Agile Thought a little plug there.
Oh, there we go. There we go.
So Vinney, you mentioned that it's an antiquated process. And I know that you're an engineer, so you're always thinking, how can something be better? How can something be more efficient?
Totally.
How, in your opinion, can this process be more efficient? I know you mentioned algorithms, but I'm curious to know what you see and how it can be better.
I love it. I love it. Kevin, what we have found is that, first of all, why I choose an area, right? So that's what we have done, filters. We call it filters of getting the data and going over 28 filters about the different age of the, of course, asset, the group types, the police reports, a lot of things, right? 28. But after that, we said, okay, what are the pain points of the seller and what are the pain points of the buyer? So we listed like 18 pain points. When the seller sells it, they lose sleep. They totally lose sleep over, by 4 months, let's say. Somebody that they're going to select, would they be able to qualify? Would they ask for retrade? Would they be able to do, a lot of things can happen, right? And then would they like me to color it and paint it or do this, that? So we have come across so many pain points, and then same thing from the buyer side. So what our thinking is, we can go right from the start. If the seller says yes to our proposal, we will buy that property, multifamily, within 15 days, all cash.
Wow.
All cash. So we'll have the capital raised already to buy that all cash, and then we'll program the syndicator. Somebody, some of my students or any other people around in the country who are looking for in that particular area to get a nice package, and we give them financing, the whole PPM, the whole survey is done, phase 1, environmental, everything. So we take that platter and give it on a silver plate to the buyer. That's what we are thinking. So making it frictionless. That's the word.
Yeah, that's amazing. And as you're talking through this, I just can't help but thinking about the possibilities, new technology like AI,
Yes.
Artificial intelligence, and
Totally.
all the complicated algorithms and logic that's capable now. Man, that could really grow into something amazing and special.
Totally. I know it's going to take us maybe 3, 4, 5 years. We don't know. But the thing is, it's something which can help, it really can help putting all these 3 systems together.
Yeah.
Yes.
And I think the way we do business in this industry is going to change. And it's from people like you and the product that you're working on right now that will really be the catalyst for that. And yeah, I can't wait to see how the industry changes over the next 5 years.
Oh, thank you. Thank you. I'm so glad you said that, because in single family, we were working on this concept for single family for about 1.5 years. But then if Open Door has really come out in the last, I think, 3 years or 2 years.
Yeah.
They've come out, and now they're selling so many homes where the owners are going on their website and say, I want to sell, what's the fair price? And they're buying it within 15 days, by the way. So
Right.
thing we want to bring it to multifamily.
Yeah, it's just changing the way business is done. And technologies like blockchain are going to change the way documents are recorded. And man, it's just really cool to think about.
Yeah. And we cannot sit on the sideline. See, that's the thing. You cannot. You got to immerse yourself. And your show is so appropriate, guys who invest. I love you guys, and the key thing would be, hopefully, when I'm coming there quite a bit. So somehow maybe we could do some more of the, let's bring them into multifamily. I think that's the key.
Let's do it. I love it.
Yeah, we love that.
Yeah, it's awesome.
Now, you mentioned Florida a few times.
Yes.
And we've heard this from a few other syndicators and investors. In your opinion, what makes Florida such a hot spot for multifamily at the moment?
Oh my gosh. Are you ready? Are you really ready?
Yes, we are ready.
I've got everything. I keep it in the proof, right? Here. Oh my gosh. Look at these statistics away.
Oh, nice.
I could share with you so many great things. Look at this here, right there. I'm just going to read it. Florida overview of the employment. We have 15.5% and professional businesses. Healthcare is very strong. Social assistance, real estate 6.6. These are all the jobs, right? Retail and whole trade 16.7. The best thing is, I would love to show you this map over here. And this shows me that Southwest Florida is going to be growing right there, 10% employment growth projections. Orlando is going to grow 10%. And then we have West Palm Beach right there next to Orlando. Then we got Sarasota. Then we got Daytona Beach right there. And then we got Jacksonville right there, right after that. That's like 6.6% growth. Tampa is right behind, 5%. So it's amazing what's happening in the marketplace. I feel that Jacksonville, Tampa, and Orlando, Miami also. We don't go that far in our company, but those three triangles are on the cusp of going way big. Like what has happened to Dallas, what has happened to Fort Worth, what has happened to Atlanta, by the way,
Yeah.
It's been amazing. So we are very bullish on, this Florida market,
Very cool. Yeah, and the high speed train right now is being connected from Orlando down to South Florida. They're working on the line right now that'll go from Orlando. Ultimately, it'll end up in Miami, and then there's going to be a connector between Orlando and Tampa. So essentially, Tampa to Orlando to over to Fort Lauderdale, West Palm, Miami, it'll all be suburbs of each other.
Oh, look at that. Look
That's
at that. Oh
great
my gosh.
for us.
I would love to do some analysis. Nobody mentioned it to me.
Yeah.
And, we are trying to put one together from San Francisco to LA, and we haven't been able to do it.
Yeah, the Hyperloop, right?
So happy that we get bullet trains coming to Florida before California. I don't know. But we went to Japan just a few months back. I was so surprised. Every 10 minutes, there was a bullet train coming. Every 10 minutes. So they must have hundreds of bullet trains. Here in America, we don't have one.
I know. Yeah, we missed the train technology somehow. So, Vinney, there's a question I really want to ask you, and it's about, I know some young people listen to this podcast who are in college or just graduating.
Yep.
I think it would just be phenomenal for them to hear from someone like you what advice you might have for them really early in their career.
Oh my gosh, you just touch a very, very good subject, because I also have a youth academy, by the way, which is
awesome.
Wow, that's awesome.
I would love for your audience to go to Vinney Chopra Youth Academy. Just Google it. You'll go in there. I really believe that at the age of 14 or 15, that most everybody, a boy and a girl, can start a business. I really believe in that. And they can start saving money. That's the other thing. They could start saving money right there. Don't watch too much television. Don't get into any kind of, gangs or things or anything, but utilize your time and your energy to learn some skill, and that way they could really be internshipping, I call it, and try to talk to somebody in your circle about real estate. Please do, because as you go through high school and then college, my passion is that you should have saved so much money that you would get a duplex. That's the key. Duplex at the age of 20 or 22. That way you'll live free on one side, because your tenant or resident is going to pay for the mortgage. So I think if we can enter them into entrepreneurship and also into real estate and saving the money, those are the 3-4 things I would like to say,
Yeah, that's amazing. And we'll link to that in the show notes, the Youth Academy. We'll definitely link to that. But that's awesome. I mean, you've really touched on a thing that's near and dear to my heart as well.
Yes.
I just love what you're doing there, Vinney. That's
Oh,
amazing.
thank you. Thank you. Thank you so much. It's such a pleasure to really visit with you guys. And if you would like to come, I know a few parts, I can add more value, kind of going deeper into the subject and make it simpler, so like that. Yeah.
Awesome.
So Vinney, a lot of the people that we talk to, and I hear this in the news, other much smarter people than Adam and I are saying there's a crash coming. There's a crash coming.
Yes.
So how would you recommend an investor prepare for the likely crash that's on the horizon?
Very good point. Actually, I've spoken about it. I'm so glad you're saying that. I know it's the biggest bull, as you can see from 2008 crash, 824 points, right? We dropped on Friday. Well, we had that 800 points again here too, but then we had 500 and so forth. Maybe the correction is happening a little bit. It's not going to be as bad as it was in 2007 and 8. That's my opinion.
Okay.
Other people are thinking that way too. Many people are saying that it's going to be middle of 2020 or even third quarter of 2020. Now they are saying. But I really believe if we purchase the asset, which is a real estate, not stocks can go up and down and all that, right? But if we purchase the real estate right, in a good neighborhood, I call it, where the jobs will be, because I really have the opinion, and I think it's very well known, that as the economy shrinks, which is of course the downfall or shrinking of the everything, if the jobs are layoffs are happening, it won't be as bad. The people will not be losing that many homes either, because we have really not put the derivatives, that's the word, remember it happened, and they were all stated loans people didn't really have to qualify for. Yep. But I think in the last 10, 12 years, it's come a really good way where you have to work very hard to qualify for the loans and everything. So that's good. The other thing is, as the economy shrinks, the buying power goes less. People need a shelter over their head. So even if they cannot afford the single family, they'll have to go to a B class or A class or C class apartment, because they will need to be, there with their family or single person like that. The other thing is, with the shrinking of the dollars, the industrial might get hurt a little bit. Hospitality hurts because many of the companies will not be spending as much money in travel, and the airlines, go down a little bit. Restaurants will go down a little bit. Office space will go down a little bit, because if shopping centers, the strip shopping centers, sometimes get hurt because people are not really buying that much, So it's a ripple effect. But if we look back in 2007 and 8, one segment of the commercial was apartments that kind of weathered the storm. That's how they say it. Even in the shrinking of the economy, the apartments are able to weather the storm, and the delinquency was only 1%. One of the podcaster was talking about 1%. I need to see that number, but it didn't happen that bad, Yeah. But if you buy it correctly, and I really suggest to everybody, stay in the market, because if some properties if they do go down later on, you'll be there to grab them, right? So sometime even shrinking is better, Yeah.
That's what I'm looking forward to, actually. Yep. I mean, is getting things on sale.
That's right. Exactly. And it's good to have good amount of money ready, qualified loans ready. Maybe some funds. I know, I have a $50 million fund that my accredited investors only. That's the 506C. But then my specific offerings, I do the 506B.
Right. Well, Vinney, this has been amazing. So we always like to ask our guests a tech question. So
sure.
We'd like to ask you, what's a piece of technology that you really like right now, or something that is enthused?
Love to share. It's been tremendous. It's called Sign Easy app. on the Android and also on the iPhone, where I don't have to print any more of these hundreds of pages or, like that. My attorney says, Vinney, you can sign. I can open it up PDF on this one and just sign in blue and date it and put my name on it, and it's done.
I love it.
So that's a great, app. Sign Easy. Of course, Dropbox. Everybody uses Dropbox, which is great. The business edition is also tremendous. I can run all over the world, but I can do my business from this iPhone and my iPad, literally, because I can just go and share the files to anybody across the country with that. The other thing is, of course, the WhatsApp, right? WhatsApp is amazing. The quality of the videos are not reduced in WhatsApp as compared to texting, right there. I don't know if you wanted only one. And the couple of them, other ones are, of course, I use Slack, S-L-A-C-K. That's a great one. And Flock, F-L-O-C-K. They're very similar, by the way. So I have two of them, one on each side, with my two portions of the company, And Zoom, by the way, I cannot.
Of course.
I cannot do without Zoom. We remotely manage our 67 people full-time, team members in our company.
Wow.
Because we have like 4 or 5 at each community, right? Then you have accounting department, full 5 people, full-time. Then we got asset manager, HR, payroll, all that. So we have built it all in just 4 years. This company is only 5 years old, but my previous company was 12 years old. Yeah.
Wow.
Amazing.
That's awesome. Well, we asked for one piece of tech. You gave us several. So we're going to make sure we have that in the show notes. Thank you for it.
Thank you.
Thank you.
The last question we always ask also is, where can people find you? You've provided a lot of value for our listeners already, but if they want to learn more about you, Vinney Smiles, how can they do that?
Oh, sure. My website is vinneychopra.com, which is VINNEY CHOPRA Chopra.com. You could Google me also. If you could just Google me, Vinney Chopra, you'll come across lots of videos. My YouTube channel is getting bigger and bigger. Then also my academy is the Multifamily Academy.com, where I teach also how to invest and give my tools and my templates and all those things, for a very reasonable price. I mean, people can get for $297 my whole big things. And then, of course, if they want master coaching, then also it's much cheaper, not as $50,000 or $40,000 at all. The maximum I charge is only $5,000, which I teach myself, all the, students, and over there on the group coaching, I do it. Yeah.
That's awesome. Yeah. Amazing prices too. Well, Vinney, thanks so much for coming on the show. This was so much fun. We just loved having you on.
Thank you so much. And congratulations on a tremendous podcast you both have. And good luck to you. And, look forward to seeing you in Tampa. I would love to.
Absolutely.
Yeah, let's do it. It'd be fun to meet up. Thanks, Vinney.
Thanks.
Thanks.
Thank you. God bless you both. Thank you. Bye-bye.